Hey everyone, Airbnb reported first quarter earnings that disappointed the market. The stock is down 10% after the company announced the earnings. So in this video, I'm going to review Airbnb's latest financial earnings results. I'm also going to update my buy recommendation on Airbnb stock. If you don't already know, Airbnb was my top stock to buy for 2023. I made that recommendation in January. The stock was already up 49% as of this morning. So you've already had a very nice run up in Airbnb stock. The decrease in today's price action was a result of expectations getting really, really high for Airbnb stock. So stay tuned. I'm going to review the earnings and I'll answer and update my recommendation on Airbnb stock. So let's begin. So revenue increased by 20% to 1.8 billion. Net income increased to 117 million. This was up from a net loss of 19 million in the first quarter last year. Airbnb's free cash flow jumped by 32% to 1.6 billion dollars. Very impressive financial results there. And what you have here is the classic case of the company doing really, really good in a quarter, but the expectations were already so high. So it's kind of like a basketball player scoring 26 points in a game, getting 10 rebounds and 9 assists, which is by all measures a really good game. But when you're somebody like Kevin Durant or the best player in the NBA, that kind of game is, average or below average. And so it doesn't really get anyone excited because we were already expecting that kind of performance. Well, this is what happened with Airbnb this quarter, that the expectations were already so high given all the pent up demand for travel, given the recovery, the economic reopening worldwide, given what other travel companies have already reported, that when Airbnb reported these figures, which on the surface are excellent figures, the stock price fell by 10%. But there was one other thing I will note that caused the stock price to fall. I'll talk about a little bit later. Let's keep going here. The active listings in the first quarter increased by 18%. This was an acceleration from the 16% growth in the fourth quarter of 2022. Remember, Airbnb doesn't own or operate any of the listings on the platform. So for Airbnb, it's just as attractive to get more people signed up on the platform as hosts as it is to get people signed up on the platform as travelers, right? They benefit from both sides of that equation. In order to get people to travel and book travel on the platform, they need hosts to list properties on the platform. So they have two sides of the equation that are arguably equally as important. So in this quarter, not only did revenue increase by 20%, but the number of listings on the platform increased, and that rate of increase is growing. More and more people are joining Airbnb as a lucrative source to generate income from their extra space, whether it be an extra room in their apartment, maybe the summer home, maybe the vacation home, whatever it might be. More and more people are putting their property on the Airbnb platform. So one of the things that's recovering very nicely is cross-border travel. Um, this, 2023 is really when the bulk of travel restrictions really started to ease. It used to be a big pain for consumers to travel. You needed a negative COVID test, proof of vaccine, there was quarantine requirements and all sorts of inconveniences. Those were really, really eased to begin the year, especially notably in the Asia Pacific region, which saw nights booked increase by 40% year over year. One of the reasons why Airbnb is so attractive to consumers is that it's an affordable option, right? You don't need to, if you're traveling alone, you don't need to book an entire hotel, which tends to be more expensive. If you're traveling alone, you might only want one room in an apartment, or you might want a shared room in an apartment. which is lower price, right? So the average price per night on Airbnb is only $67, and over 80% of the listings are under $100 per night. Now, of course, we can get into all of the extra fees that come on top of the average price per night, but that's the same. That's, similar with hotels. When you book a hotel, you get the price per night, and then you have the hotel resort fee, the parking fee, and other fees that come on top of it that sometimes are double or triple the hotel price per night. So the way these companies report the price per night is a bit misleading. I will grant you that. The ADR in the quarter, which was the average daily rate that customers paid, was $168. That was flat year over year, so the ADR did not increase year over year. Two forces were at play there. Number one, hosts have increased the daily rates that they're charging for their properties. And then number two, the parts of the world that are recovering are the parts of the world that have lower ADR rates, right? So the Asia Pacific region and the Latin America region tends to have lower average daily nightly rates compared to the North America region, and those other two regions, the that I mentioned earlier, have been growing much faster than the North America region in the most recent quarter. Here's what caused the stock price to fall, in my opinion. The company forecast second quarter revenue growth of 14% at the midpoint. Now that's lower than the 20% in the first quarter. But to make matters worse, Airbnb said it will be spending aggressively on sales and marketing in the first half of the year. So even though the revenue growth is going to be lower, that is coming with higher sales and marketing spending. So it's a double bad news here. They're telling you that revenue growth is going to decelerate, but oh, and by the way, we're going to increase sales and marketing expense, which makes you wonder, as an investor, what's the organic underlying demand here? If you weren't to increase this spending on sales and marketing, what would have your second quarter look like? Are the bookings looking so bad right now, the reservations looking so bad that you needed to boost up sales and marketing expense, or the quarter was going to be a disaster in terms of revenue growth? That's what really got investors worried, and that's what sent the stock down 10% after these earnings were released. So, to answer my question, which I said earlier in the video, to update my recommendation, I had Airbnb as my top stock to buy for the year. I am now saying it's time to take profits. It's time to, if you bought Airbnb stock in January, it's time to sell and take your profit. You would have made a very nice gain on the year. The stock is up 49% as of this recording. Very nice gain. I'll take a 49% gain all day long. Let's take that. The underlying organic demand has come into question here for Airbnb, and I don't want to take on that extra risk if I've already had gains of 49% for the year. Now, I still have Airbnb stock recommended as a buy. It's just not my top stock to buy right now. So I've downgraded it from my top stock to buy to just one of the stocks I have as a buy. All right. Thank you so much for watching. That's all I've got for this video. I hope I'll see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.